Following on from the bad news about Spain over the weekend, further storm clouds gathered over Europe's fourth largest economy. It seems that for the quarter ended 31 March 2012, Spanish GDP fell by about 0.3%, meaning that technically Spain has gone into its second recession since 2009. Surprisingly, Spanish bond yields did not actually spike on the news. In fact, the 10-year bond yield came back slightly. However, viewers should bear in mind the fact that since the beginning of March, the Spanish government is now paying around 1% more than it did for 10-year money. In terms of other news coming out of Europe, there is significant concern over the rise of the right-wing parties. Viewers will also be aware that there are 3 general elections due to take place over the next few weeks, in France, in Greece, and the Netherlands. And one of the party manifestos of these right-wing parties is actually secession from the European Union. And therefore this would mean the breakup of the European currency. So what is the effect on markets? Well, looking at equity markets first, the Dow was actually down only slightly. However, most European markets did feel the impact, some of them being falling by more than 1%. Both the New Zealand market and the Aussie market, of course, were closed before the news about Spain came out. Looking at currency markets, however, the Kiwi currency did take something of a buffeting, falling against most of its major trading partners and back through the 82-cent US mark. New Zealand's bumper dairy production year continues unabated, with production in this country up roughly 10% year on year. Looking at April, analysts expect April production to be up around 15% on last year. And given the fact that last year was very strong as it ran off, this is actually saying something. So where is all this extra production going? Well, for March, China's imports of milk powder increased by around 25%. Of that, New Zealand supplied around 60%, with the bulk of the remainder coming from the EU and the US. On the subject of the US is also having a bumper year in terms of milk production. However, some dark clouds on the horizon there perhaps. When you actually look at with the recent dairy prices, as well as the extreme cost of feed in that country, profitability for dairy farmers in the US fell during the month of March, roughly 30% relative to the previous March. What this possibly means is, coupled with the high price of beef, that extra supply in the following year may not materialise, and that would be very good news for New Zealand's dairy farmers.